All right, we're going to go ahead and get started. Hello, everyone. Welcome. Thank you for joining us today for this webinar from the Good Food Institute on plant-based meat in U.S. food service. We'll be talking about market trends, COVID-19 effects, and how plant-based can help rebuild the restaurant industry. I'll be presenting today's webinar. My name is Zak Weston. I serve as the Food Service and Supply Chain Manager at the Good Food Institute, and I'm joined today by my colleague, Kyle Gahn, who will be moderating for the Q&A session that'll follow this presentation. Our plan is to present for about 45 minutes or so, and then do approximately 15 minutes of Q&A. So I do encourage you throughout the presentation, please feel free to leave questions in the Q&A box. It should be on the lower part of your screen. Kyle will be addressing some of those questions throughout, but we will also address some of them during a live Q&A session at the end, which Kyle will moderate. We are recording this webinar for future use, and we will be sharing the slides after the presentation is over in a follow-up email. So you'll be able to share either the recording or the slides with colleagues who haven't been able to attend the webinar, or for your own personal use later. Today, we're going to be focusing on a couple of key areas. We'll first start with an overview of the plant-based meat market in U.S. food service. And this is coming from a report that GFI worked with market research firm NPD on to talk a little bit about some of the opportunities and trends that we saw pre-COVID. Next, we'll talk about the effects of COVID-19 on plant-based sales and the food service industry in general. And we'll close with some observations and analysis of how we think plant-based is going to perform into the future and how we think it can help rebuild the food service industry. First, just for a note for those who aren't familiar with the Good Food Institute, we are a nonprofit organization that is completely funded by philanthropy, not by industry, and we've earned GuideStar's 2019 Platinum Seal of Transparency, which was an honor that is obtained by less than 1% of nonprofits. We focus on three key areas of engagement. We have a science and technology team, a team of scientists that works to advance and open source the foundational science of alternative proteins. We have a corporate engagement team, of which Kyle and I are both members, that works with the world's largest food manufacturers, meat companies, restaurants, and retailers to help them capitalize on the opportunities in alternative proteins. And we also spend a lot of time working with investors and startups to fill gaps in the marketplace. And finally, we have a policy team who works to make sure there is a fair and level playing field for alternative proteins globally, and lobbies for government investment in sustainable protein R&D. And we do this in a multitude of countries and regions, and have over 100 team members spread around the world. The reason we focus on alternative proteins from plant-based sources, fermentation-derived sources, or from cultivated sources is we want to figure out a way that we can sustainably, efficiently, and safely feed a very rapidly growing global population. There are a lot of harms that come from industrialized animal agriculture. I won't go into too much details on them in this presentation, but the reason we promote alternative proteins, alternatives to meat, egg, and dairy from animal sources, is because we want to address these global issues and ensure that we have a food system that can sustain a population, not only that it's growing, but is increasingly demanding more protein. The reason we wanted to focus on food service, it is a little bit of an interesting and challenging time, certainly, to talk about food service right now, but it's important, we feel, to share data on past trends so that plant-based companies and all their alternative protein companies have the best resources at their fingertips when they're going into sales presentations, or in general, making the business case to investors for why their companies and products should be featured in the food service industry. One thing to note too about food service data in general, we present a lot of different market research and data sources here at the Good Food Institute, but food service data is very different from retail data. We often don't have as comprehensive of a look. It's a much more fragmented market. And as a consequence, we have to rely in the food service sector a lot more on menu penetration research, consumer sentiments, operator surveys, and case studies to find the information that we need. With that said, NPD SupplyTrack service, which we will be featuring for most of this presentation, has a wonderful and probably the most comprehensive look at food service sales in the United States, and has been a great partner for the Good Food Institute. So we're excited to present their data, a lot of their research today, and encourage you, if you're interested in following up with them or with us to get more, I'd be happy to talk about that. Another thing I will note before we jump in is that there is some limitations to this data. Almost all of the data we're looking at today is for the 12 months ended December 2019. So it's for the full calendar year of 2019. And as such, it predates the COVID-19 pandemic and associated lockdowns. So this is what we're looking at is not meant to be taken as current performance in 2020. Another thing to note for these numbers is that this is looking at wholesale pricing. SupplyTrack aggregates sales from distributors to broadline food service distributors to food service operators and restaurants. It's not looking at the end user pricing. In other words, what restaurants or food service operators are charging to their customers. This is syndicated from most of the major broadline food service distributors. So companies like Cisco, US Foods, Performance Food Group. Broadline food service distribution as a category represents about 40% roughly of total food service sales volume, and NPD covers the vast majority of this. So the data we're going to be looking at today from NPD covers roughly 1/3, or about 34% of total food service distribution sales in the US. So just keep that in mind, it's not the whole market. This also is excluding data from large chains over 250 units. So it is skewed towards non-commercial operators as well as small to medium-sized chains and independents. And this is today, this data in this report is just available for plant-based meat. We won't be talking about egg or dairy products, and we don't have this data, unfortunately, for any other markets outside of the United States. Just to contextualize where the data is coming from, if we think of the market as divided into three parts, on the left we have food manufacturers who produce products and then send them to food service distributors. And we've listed out in purple in the middle, the center column, the various types of food service distributors on the market. Broadline represents about 40%, as I mentioned, and this is the part of the food service distribution universe the NPD data is covering. From broadline distributors, of course, products are then sold into food service operators, both non-commercially, as well as small to medium-sized restaurant chains, and a little bit into large restaurant chains. So we'll be focusing on the broadline data, as well as the sales today to non-commercial and small to medium-sized restaurant chains. And the upshot of the report from NPD and what we saw from 2019 is that 2019 was a very, very good year for plant-based meat sales. Dollar sales grew 37% year over year, and pound sales grew 21% year over year. This growth makes plant-based meat specifically one of the fastest growing categories that NPD tracks in broadline food service. Another exciting part of the report is it shows the evolution of the plant-based category beyond the bun. While burgers certainly are very dominant and very prominently over-index in food service, we've seen that the fastest growing formats, according to NPD's research, are other formats such as sausage, Italian sausage, brats, fillets, and meatballs. So this is important because while plant-based burgers certainly have a lot of growth ahead of them and still a lot of market penetration left, we think, there's also a lot of opportunity, and we're seeing sales traction for other formats. This isn't just a one-hit wonder. It is something that can work in a variety of categories and across a variety of formats. According to NPD's research, meat analog burgers, so the distinction here is made between traditional veggie burgers where the vegetable or plants are really the stars, something like a black bean burger or a quinoa burger, and meat analogs being products that are trying to replicate the sensory experience of meat. That's the distinction that NPD uses, and a distinction often that the Good Food Institute also uses. So meat analog burgers are less than 20% of total plant-based protein sales, according to NPD, but drove over half the growth. So a lot of the excitement and a lot of the activity over 2019 did come from meat analog burgers. One other thing to note here is just comparing this market share or this format breakdown to our SPINS date research on the retail side. Burgers make up approximately 30% of US retail sales, according to our SPINS research, but they make up over 40% of the volume in food service when you count both meat analogs and traditional veggie burgers, which does mean that restaurants and food service in general over-index for plant-based burgers as a format more so than in US retail, which is understandable given the traction we've seen for burgers in food service. Another thing to note from this data is that it seems to be very well represented and spread across a variety of different types of operators. So for example, non-commercial represents about 28% of volume. This is very much in keeping and an appropriate market share with the total volume market share that non-commercial food service enjoys in total US food sales, according to the USDA's Economic Research Service. And then you can see the rankings in terms of the amount of volume that different size restaurant chains are responsible for. So independents are responsible for the largest portion of the volume, followed by small chains, micro chains, which are 3 to 19 locations, and then medium chains, which are any restaurants that have 100 to 249 locations. Another interesting insight that emerged from this data is that the operator segments that are very strong for traditional animal beef burgers are also very strong for meat analog burgers. So again, those are the burgers that are replicating the sensory experience of eating a beef burger. You can see in terms of the share of volume that casual dining, bar and grill does extraordinarily well. Quick service burger has done very well, as well as mid-scale family style, rounding out as the top operator channels. This provides a few insights for plant-based companies who are looking to develop their sales strategies. It's important, of course, to target these types of restaurants. They're already interested, so bars and grills, QSR, quick service, fast food, and then family dining, where plant-based burgers have already made significant inroads. But it's also important, of course, as you're developing your food service sales strategies, to look to other operator categories that have been less influenced by the growing demand for plant-based burgers, but still, of course, have an interest in seeing those same kind of growth numbers in their categories. Another thing that was interesting from the NPD report, and is very much in keeping with research we've seen from a variety of sources at the Good Food Institute, is that the trays among consumers who are buying these veggie burgers, the top entrees listed below are beef burgers, chicken nuggets, tacos. In other words, completely ordinary dishes, things that we expect most consumers to eat. And this really underscores the notion that this demand growth, this extraordinary sales growth, is not being driven by consumers who are exclusively giving up animal proteins. It's not being driven by vegans and vegetarians. It is being driven by flexitarians and omnivores, consumers who are having a beef burger perhaps one night, a plant-based burger the next day, and then having some animal-based chicken the following day. It's a part of their protein. They're diversifying their protein sources. They're not exclusively moving to plant-based sources. This is important, of course, because as a food manufacturer, whether you're a small startup or a large multinational food company, it's important to focus on the largest possible market. A lot of previous generations of plant-based meat products really focused on being formulated for and selling to the vegan and vegetarian community, which is much smaller when you compare to the overall numbers of flexitarians and omnivores in the United States, which is obviously a much larger market. So that's part of why we've seen such tremendous sales growth over 2019 and previous years, because the products are being targeted to a much larger group of people, and a much larger group of consumers are becoming aware, trialing these products, and becoming loyal buyers. Another thing that was of extreme interest to us in understanding a little bit of what NPD's data can cover is understanding where the demand is coming from. So one of the things that NPD measures is how many operators start purchasing these products, how many stop purchasing, and then are able to derive some insights from that in terms of where the volume is coming from for all the new plant-based sales. So according to NPD, over the course of 2019, 11,000 commercial operators started purchasing specifically meat analog burgers. This is just looking at that subcategory. And about 2,500 of them stopped purchasing, showing that this isn't really a fit for everyone. It isn't something you just throw on the menu and expect it to work in every single brand, every single operation. But what we were able to see from the NPD data is that price and velocity were significantly stronger for meat analog burgers compared to traditional veggie burgers. So I unfortunately can't share the specific numbers. If you'd like to get the specific numbers on pricing and velocity, feel free to reach out to me afterwards or reach out to NPD. But what I can say is that even though meat analog burgers were priced significantly higher on a per pound basis than veggie-centric or traditional veggie burgers, the velocity was also much higher, which means they were turning over faster and really earning their place on distributor shelves and, of course, on operator and restaurant menus. Just to give you an idea of what this looks like, so when we think about where the volume is coming from in terms of plant-based burgers, we saw that there were a certain number of operators that were retained. As we alluded to, some of them were lost, but a lot of new operators coming in really was responsible for a lot of the growth and driving the category forward. But it wasn't all just operator shifts, and I just want to take a moment to clarify some of the methodology of what we're about to talk about. Some of the growth in plant-based meat, and particularly plant-based burgers, came from consumers switching from all other protein sources to purchasing plant-based burgers. So this analysis is, this methodology note here from NPD is just noting the source of volume, the casual protein universe, is where they're deriving the where they're basically measuring and comparing. In other words, if consumers or operators start buying more plant-based burgers, are there resulting declines in other casual protein expenditures that we can see elsewhere? So with that in mind, what NPD found as a result of looking at that source of volume is that while there is some impact from just new buyers coming in, so new operators coming into this category, some of them closing, some of them leaving the casual protein, center of plate protein category, a lot of the shifting came from actual moving from other products like beef, chicken, other types of poultry, et cetera, into the plant-based burger category. And we also saw some of the gains coming from just an increase in the overall category buying rate, in which operators are just buying more casual proteins overall. The vast majority, and again, I can't share the exact number here, but the very significant portion, well over 50% of the gains for meat analogs, so again, this is for plant-based burgers that are replicating the sensory experience of beef, majority of those gains are coming from operators shifting that volume away from other proteins, and that included beef, chicken, turkey, and fish. It also included, to a lesser degree, certain types of other plant-based proteins. So we have seen some displacement of traditional veggie-centric burgers with the meat analog burgers. And we expect there will still be some of that, according to NPD, as the category continues to grow. This is important to note because it does underscore that there is an opportunities here. These products are bringing in new consumers, but it is also causing existing consumers to switch a little bit of their consumption. This is also interesting to note because our hypothesis at the Good Food Institute is that a lot of consumers are using this as a way to get back into the beef category. At least in the United States, beef has acquired a lot of a reputation for having negative nutritional outcomes and certainly negative environmental and ecological outcomes. And so our thought is that perhaps a lot of consumers are using plant-based beef as a way to have that beef experience, that burger experience, without having some of the associated sacrifice or some of the negative downsides. And one of the implications of this is that it's likely that plant-based burgers can help restaurant operators with more beef-centered menus attract back diners and dining occasions that they perhaps have lost to chicken or other food categories. One thing we wanted to do as a result of learning about this data was take an estimate at trying to size the total market for plant-based meat in US food service. To do this, we have to make several assumptions and apply several multipliers, which I wanted to talk through. The first is to note that based on NPD's data, again, that's just looking at wholesale sales, we have a number of $224 million. The first thing we need to do is convert that in order to compare that to, say, our SPINS data on the retail side, is convert that to actual retail sales volume, or what the customer is paying the restaurant for those products. To do that, we have to figure out exactly how much restaurants and food service operators are marking up these products, which generally ranges, according to the best research I could find in the industry, between a 3x multiplier and a 5x multiplier. And then, of course, we also have to expand these sales to the rest of the food service market, since NPD is really only covering that 34.8% of total food service volume. We have to figure out whether or not the rest of the market has a similar plant-based penetration, whether or not it has more plant-based penetration or less. Based on our research at the Good Food Institute, including a project we've done called the Good Food Restaurant Scorecard, where we look at the top 100 chains in the United States and the menu penetration of plant-based meat products, as well as plant-based egg and dairy. We think that the rest of the food service industry, in large part, probably has at the very least similar and potentially higher market penetration for plant-based. But even if we use just two of these multipliers conservatively, so use just 3 and 2x as the multipliers respectively, we get a figure of approximately 1.34 billion. I wish it was as easy to peg to a very specific number, but the reality is we do have to make assumptions in order to arrive at this figure, but it still gives us something that we can point to as a really promising signal. And again, this is from 2019, so it does not take into account the size of the market in 2020. All bets are off, of course, in the wake of the COVID-19. But to compare that with the 2019 SPINS data that we have on the retail side, plant-based meat sales there were about 939 million. So that would have made, in 2019, the total US market for plant-based meat approximately $2.2 billion, if you believe those assumptions, or could be higher, of course, if you think that those assumptions that we used were too conservative. Moving on now, we're going to look at some other additional sources of market data and sales results for plant-based in food service. So that concludes most of the NPD data that I'll be sharing today. I'll be referencing at the end of the presentation where you can get in touch with GFI or NPD if you'd like to see more detail or get some more of the concrete numbers that we weren't able to share on this public webinar. Starting off though, a different service or different research project from NPD earlier in 2019, I believe it was conducted research that ended in May 2019, found that plant-based burgers have a 3.4% market share in US fast food restaurants. Fairly impressive for a category that did not or almost barely existed just a few years ago. Data Essential, which looks at menu penetration of different terms, found that the term plant-based grew over 300% on menus over 2019. And the Dining Alliance, which is a group purchasing organization composed of thousands of restaurant members, found that their meat alternative sales growth from 2018 to 2019 was well over 250%. A lot of these, of course, are large numbers because they're coming from small bases, but it still represents astonishing growth and a very promising trajectory for plant-based in food service. Another source of important source of data that we look at GFI to understand what the potential is for this market is looking at specific case studies. So as of late 2019, what we found from the Burger King test and subsequent nationwide launch of the Impossible Whopper is that it raised the check average for them. According to Burger King's third quarter earnings report, they cited the Impossible Whopper as a strong driver of their 5% comparable sales growth in the US. And based on some statements made by one of the largest franchisors of Burger King restaurants in the United States, they said demand stabilized roughly as of the end of 2019 at approximately 28 Impossible Whoppers per location per day, which would give Whoppers roughly 10% market share, Impossible Whoppers, excuse me, 10% market share of all Whoppers sold across the United States per location. So again, not the most comprehensive data. Unfortunately, a lot of these results are private and not made public, but what we have been able to ascertain from publicly revealed data suggests that there's a lot of potential and has demonstrated very strong sales results for these companies. Another launch that had similar positive economics was Dunkin', which launched the Beyond Meat breakfast sandwich late in 2019. According to them, same-store sales rose. They also saw an influx of new customers being brought in by the item, which is, of course, a very important driver for restaurants and something that every restaurant operator is going to be doing again in the future. And they also saw, again, that the average check size, the amount of money that each consumer was spending per order, was significantly higher for the orders involving the Beyond Meat sandwich compared to the average order total across all other food types. This strong performance is not limited just to plant-based meat, nor is it limited just to large national chains. This is some data from Just Egg and their launch in Gregory's Coffee, which is a smaller coffee and breakfast cafe type chain. Just Egg became the number one breakfast item chain-wide in 2019, taking a very significant share of breakfast sandwich sales. According to Gregory's, it did not cannibalize other items. Again, it's bringing in incremental customers and incremental revenue. It raised their average check size, and it also demonstrated strong loyalty. In other words, people would try it, they would like it, and they would come back again and again for it. Finally, I wanted to flag a quote here from the CEO of McDonald's, who said recently in an interview with Jim Cramer that I certainly expect over time that you will see plant-based in the McDonald's menu. I think for us, the question is really about when. Well, certainly the advent of COVID-19 has sort of put on pause, I'm sure, or at least slightly on hold some of the plans that McDonald's had. They, of course, had a test earlier in 2019 of a plant-based burger in Canada, and they've tested a few different plant-based items in different markets globally. So we do expect that this is still something on the radar of even the most major food service chains. What's also exciting, based on the research we do in the Good Food Institute, is that this growth we're seeing in food service is not somehow out of sync with the growth that we're seeing in other parts of the market. So according to our SPINS research for the whole year of 2019, retail plant-based food sales grew about 5 times faster than total food sales, growing 11% from $4.5 to $5 billion in the course of the year. And again, that's the reason that number is so much higher than the NPD number, of course, is because it's looking at retail sales, not wholesale prices. And it's also looking at a much larger percentage of the total market. Another really exciting revelation from that research with SPINS on the retail side is that plant-based is doing extraordinarily well where trends start. And we also see this on the food service side. Plant-based does very well in independents and smaller concepts where a lot of trends first get their start. What we see in retail is that plant-based meat has about a 1% market share in MULO, or the very traditional mainstream grocery stores, but that market share percentage is 8% when we look at the natural channel, and about 3% in specialty gourmet stores. So the smaller format, a little bit higher end stores. That number is even more impressive, by the way, for plant-based milk, as you can see on the far left here on the graph. Plant-based milk has about a 13 to 14% market share in mainstream US grocery channels. But if you look at natural grocery stores and especially gourmet, that number rises to be 20%. And in the case of natural, 41% market share for plant-based milks of the total overall milk category. So extraordinarily positive signal for the future of this of plant-based category. Another thing that we track very closely and obviously pay a lot of attention to is the repeat rate. How loyal our customers? Is all this interest just being driven by a trial that people never return to, or is it something they return to repeatedly? And the best research we have, this is from earlier in 2018, 2019, suggests that the repeat rate is growing and is very significant, quite high, over 60%, as well as the buy rates, the amount of that consumers are purchasing per trip. Next, I wanted to jump into a few of the COVID-19 effects. So most of that data that we've been talking about so far, of course, is from 2019, represents the world before the coronavirus. And we all know that everything has changed quite drastically since then. Previously, prior to coronavirus, food service was certainly the largest source of sales for a lot of different companies in this space, and for good reason. It represents, at least in the United States, about 54% of food expenditures. It's where more money is spent overall. And it's often where trends get their start and gain that crucial early adoption and crucial early traction. It also generally features slightly higher markups for a lot of manufacturers, which it makes it a little bit easier when you're a small company starting out to have your premium product be profitable. And there's also a nice bit of PR boost and signaling benefits that come from food service. Retail, on the other hand, before the COVID-19 created all this pandemic buying and shifted a lot of that volume, represented about 46% of food expenditures. It represented a much larger share in terms of total mass or total volume, pounds of food, just because you have a lower markups on foods. And of course, it has a higher importance to our mission of reducing the harms of industrialized animal agriculture, because it's a much larger share of total volume. But as you can see from the charts on the right, while food service has steadily been gaining market share over the past few decades, and retail has steadily been losing that share of food expenditures, you can also see that food service retail sales took a massive dive, plummeting by more than half between February and April of this year, from $65 billion approximately to $30 billion. And in the month of May, food service really recovered only about a quarter of that loss. What we're seeing since then is that even as restaurants are slowly starting to open up, consumers are a little bit wary of going out to eat still. So that's going to take a long time and a while before we'll be able to build back that volume. In the midst of this, when we look at retail, plant-based meat has performed fairly well. It's consistently, in terms of dollar sales growth, outperformed animal meat dollar sales growth in retail. Although, again, this is a much smaller category comparatively. And so while total market share has slipped a little bit, it's great to see the sales growth has kept up. In some cases, of course, exceeded the growth rate of animal-based meat. COVID-19 has also created some interesting opportunities, both in PR and on the supply chain side. So a lot of the plant closures that we've seen in the animal meat business, and some of the demand shifts as formats are different in terms of what's demanded in food service versus retail, has led to some increased animal-based meat prices. I don't know how long this is going to persist. It's hard to say. It could be over in a couple months. It could persist for a long time. But what we anticipate is that there are some short-term opportunities where plant-based products, which traditionally are a little bit more of a premium product for most consumers, will be a little bit more price competitive. Some other research from Data Central, just is based on survey data, indicates that in particular younger consumers, but a certain percentage of consumers are reporting that they're less likely to order animal-based meat due to COVID-19. So the majority of consumers are either not concerned, or it's something that's of slight concern but really isn't going to shift their behavior. And about a little under 30% there say that they are interested in, less likely to order animal protein. And this is very much in keeping with the pre-COVID-19 trends of consumers trying to integrate more plant-based proteins into their diets and integrate or use fewer animal proteins. And younger generations, of course, are over-indexing for that shift. They're also over-indexing from this study. Younger consumers are much more likely to say that they're going to eat more plant-based meals due to COVID-19. Again, for the majority of people, this is going to either create more meat or just result in no change. But it is shining a spotlight and causing some people to think about a little bit where they're eating. And it could in some ways be seen as an accelerator of the previous trends of integrating more plant-based proteins and plant-based meals. About half of consumers report that they are willing to eat more plant-based meat in the event of meat shortages. So we haven't seen this much coverage of slaughterhouses or just the meat supply chain in general for a long time in mainstream consumer press. So that could be part of what's driving this. And this is certainly just a survey. It represents interest that could translate into some trial, but of course it's aspirationally a very positive direction for plant-based as a category. Another important thing to keep an eye on that we tracked and was recently presented as part of our State of the Industry report and State of the Industry webinar is investments in this space, because that of course indicates both investor confidence as well as food industry strategic partnership confidence in the future of this category. And what we see is that already in Q1 of 2020, plant-based companies have raised over $740 million in capital, which is almost as much as all the capital that was raised in 2019. And a lot of that, of course, has to do with several very significant deals, most notably Impossible Foods and Live Kindly. But it does indicate that there is an interest in from the investment front, and that investors do see a bright future for this category. Another positive signal we've seen post-COVID, obviously the coronavirus originated in China and hit China very hard early on, and China's coming out of lockdown quicker than a lot of other places. And what we've seen as part of that rebound is a lot of launches of plant-based meat products and restaurants using plant-based meat as a way to drive interest, generate a lot of brand like innovation points, and in general just get some really positive PR. So we've seen launches from companies like Cargill, Starfield, Beyond Meat. This isn't even an exhaustive list. There are other companies that we continue to read about, including Omnifoods and Omnipork, who are launching all the time in some very major brands, including multiple brands under the Yum brands heading. One of the things that we looked at the Good Food Institute, particularly early on as this hit, is doing a strengths, weaknesses, opportunities, threats analysis of the plant-based industry in the middle of the current crisis. And while certainly it's very challenging in the short run, we do see some opportunities as well as a lot of things and risks that plant-based companies need to be aware of. On the positive side, there has been strong demand growth. Plant-based does have that going for it. In general, most plant-based companies seem to have had stable supply chains. A lot of products have strong shelf life, and there's a lot of opportunity because there's just a lot of volatility and uncertainty in terms of competitor products. At the same time, of course, there are some threats and weaknesses. Plant-based is also susceptible to supply chain disruptions. Hopefully that won't happen, but it could. Oftentimes too, plant-based companies, particularly smaller startups, have to enter the market at a premium price. And sometimes, particularly in deeper consumer recessions, premium products are either, the consumption is generally reduced a little bit. So that is something to be aware of and something to invest a lot of work in to try to lower those prices. Additionally, while we have seen a lot of positive investment, a lot of companies are really dependent on additional capital from venture capital sources. So we do hope that there continues to be capital out there to invest in these companies to help them scale. We also recognize that a lot of companies are early in their R&D life cycle, and trying to make sure their products get better is a very important part of their mission. And so while we do know that a lot of companies are going back to work, significant R&D interruptions definitely hurts the plant-based industry more than it hurts the incumbent industry. And finally, since food service has been very hard hit, that is tricky for a lot of companies that were relying on food service as their go-to-market strategy. So it does mean that we have to look for other channels and figure out other ways to succeed as an industry, while of course embracing the bright spots that do exist in food service. There's also a lot of additional trends and things that have been triggered by the coronavirus and COVID-19 associated lockdowns. I'm not certain, and nobody really is at this point, exactly what's going to happen. The one thing I will highlight is that we just live in an era now, of course, with a lot more volatility, uncertainty, and chaos, and that does heighten other risks. The biggest story prior to this year in the global meat business and really in global food was the rise of African swine fever in China, which had a massive impact on their herd, resulting in a culling or the deaths of about half of their herd, having an enormous financial impact. And their sad reality is that can happen again if African swine fever escapes from the areas in which it's been confined, or if we see the outbreak of another disease like avian flu. We're basically just seeing play out in a lot of ways right now exactly the fragilities and risks inherent in industrialized animal agriculture. And unfortunately, those risks are even higher today as a result of all the restrictions and limitations and stresses that have been placed on the food system due to COVID-19. But where does that bring us right now for the short term? Of course, we're interested in rebuilding our industry and helping to rebuild the food service industry. So I think it's important for food service sales to target strategic, less affected segments. Some non-commercial businesses, as consumers go back to work, as they go back to their educational institutions, will be able to rebuild volume a little bit quicker, potentially, than some commercial operations. A lot more people are shopping in grocery stores and using that as a way to get food. So any food service that can happen in a grocery store seems like it will be a bright spot. And some particular segments within restaurants, such as fast food, anything that relies on a drive-through, pizza, anything that relies a lot on digital channels seems to be poised to do fairly well, or at least rebound a little bit quicker than some other types of restaurants. In particular, digital is exciting because plant-based performs very well on digital, in large part due to it just having a younger consumer base that's a lot more digitally fluent and digitally comfortable with ordering through like delivery apps or even for pickup. We do expect, of course, that work from home trends are going to change commuter eating habits around breakfast and lunch. So that is going to shift not only the types of foods consumers want, but the types of restaurants they go to. In the long run, this is less of an opportunity, I would say, for short-term sales, but it is something to keep in mind that this pandemic has really underscored a lot of the risks inherent in the animal meat supply chain. It's not really great for the animal industry to have all these slaughterhouse pictures in the news, and particularly the reports of worker safety concerns. And so this is an opportunity for the plant-based industry in the long run to position itself as a positive alternative. And that ultimately was the goal of part of this presentation, both using sales data and case studies, as well as setting a little bit of a narrative vision. We really need to position ourselves as an industry that can be a growth driver, bringing in new customers, attracting a sort of a buzz around the innovation that's happening in plant-based, and using that to rebuild the restaurant and food service operator industry. So I want to close the presentation with this last section to talk a little bit about how we anticipate that going and where we do expect plant-based to go over the next few years. The first thing to note is that plant-based presents several different ways we think that it can help reposition and rebuild the food service industry. The first set of those things is culinary. Plant-based proteins offer a platform for creativity and innovation. It's almost like an artist being given a new palette of colors with which to paint. Plant-based products allow you to reformulate a lot of existing dishes that are on your menu. If you're giving a sales pitch to a restaurant, it also enables them to create brand new dishes. They can potentially work with blended proteins. And eventually, of course, over time, plant-based is a platform that allows us to create whole new products that have really never been seen before. While the focus today oftentimes is on analog products that replicate the sensory experience of animal-based products, there is the possibility, of course, for very exciting new forms of protein and new forms of foods over time. The last thing I'll underscore that I think is a very cogent sales point when you're talking to restaurant operators is that there is an enormous amount of versatility and variety that you can get from adding just a single plant-based item to your pantry. As an example here, just adding plant-based beef to your pantry would get you the ability to add almost 15 and probably more dishes to your menu with one go. So that's an opportunity for both a sales pitch and from a restaurant standpoint to just, with a very simplistic back of the house change, really remake your menu and offer an incredibly exciting diversity of plant-based dishes. The next thing, of course, it's not just about culinary innovation. It is ultimately, at the end of the day, about rebuilding sales, rebuilding traffic. And we've seen from the case studies I've shared and from NPD's data that plant-based is a phenomenal growth driver and attracts a lot of excitement to restaurant brands. It brings in new consumers. It does raise check averages. Consumers have indicated that they're willing to pay a little bit of a premium for plant-based foods and plant-based dishes. And it also eliminates the veto vote situation in group dining. Often when groups are going out to eat, it's the person who has the most dietary restrictions who ends up determining where the group goes. As a restaurant or a food service operation, every operator wants to be a place not only where all consumers feel welcome, but actually where all consumers, no matter their dietary preferences or allergies, feel excited to go. And plant-based can help with that. We also think that plant-based does represent not just a passing fad, but a long-term paradigm shift. As we've seen, repeat purchase rates are high. There's also a real diversity of the reasons why people are eating more plant-based foods. We have a lot more research on this if you're interested, but generally people are coming into plant-based because they're interested in the health benefits. They're interested in the sustainability benefits. They might be interested in animal welfare. A lot of consumers come into this category because they just prefer the taste and they want to integrate a little bit more protein diversity into their diets. There's a wide variety of products and that variety is only growing. And there's a real demographic diversity of consumers too. Plant-based appeal seems to cut across all generations, income levels, education levels, et cetera. We've also seen a real explosion of plant-based into different categories, so into fast casual, QSR, burgers, and also into a lot of different food types. We've seen specifically in the restaurant space that plant-based has stayed on menus once it's been added. We've seen increasing advertising budgets devoted to it, and we've even seen some chains double down. For example, Burger King launching a second plant-based meat breakfast item from Impossible. It does appeal to a wide demographic variety, but when we're talking about the future, of course, we're interested in younger generations, the generations that are aging into more and more purchasing power, and increasingly, in the case particularly of millennials, becoming parents. And when we look at plant-based appeal to future generations, that demand is off the charts. So there's a very bright future for all of these reasons and more. And this is why we think that this isn't just a short-term thing. This is actually a very long-term shift in consumer purchase behavior. We think increasingly we're going to start to see restaurants and also CPG product developers start to formulate their products or build their restaurant dishes around plant-based ingredients that can meet everyone's needs. So for example, you won't necessarily want to stock multiple versions of a product or an ingredient like butter when you can just stock one version that appeals to the maximal number of people. A good example of this is kosher. A very, very tiny percentage of American consumers are keeping a strict kosher diet, and yet over 40% of the packaged foods and beverages sold in the United States are kosher, which just goes to show the food business is based on volume and it's based on scale. And there is a very significant benefit to operators and product manufacturers and retailers by having products that can appeal to, say, 99% of the population instead of just 97%. Those small incremental gains spread over a large volume can create enormous sales advantages. So we increasingly expect more and more products to be formulated to be completely plant-based to appeal to the maximal number of consumers. What we've seen, obviously, in the evolution of the plant-based category is that this isn't the first time that plant-based has been a huge hit. Over on the retail side, milk was the first breakout category, which really demonstrated the power of adjacency. In other words, plant-based milks, by moving from the center of the store, cardboard bricks, into the dairy case alongside animal-based milk, created a massive sales explosion to now where they do represent 13–14% market share in mainstream grocery. Burgers, of course, have had a very successful couple of years, and we've talked quite a lot about them today, and really have demonstrated the power of an analog product, something that replicates that sensory experience of an animal protein. And we expect that the third waves or the coming generations of plant-based products are going to see a lot more of that same analog experience. Lots of sausage alternatives, things that replace pork and beef. We've already seen a lot of launches, as we alluded to, in the breakfast side, and plant-based is really well positioned to benefit operators in breakfast burritos, breakfast sandwiches, omelets, et cetera. We saw a massive explosion of interest from Mexican chains, Del Taco, Qdoba, Taco Bell. They all had some sort of different take or spin on a plant-based protein, but in the end, they all have added it in 2019 and kept it on menu for a long time. We've seen some major tests and launches of plant-based meat pizza toppings in the Italian segment with pasta and meatballs. And we expect that more ground products, such as chicken nuggets and tenders, as well as a very, very broad variety of different types of dairy derivative products, such as yogurt, milk, and butter, will also start to show up a lot more on food service menus over the rest of 2020 and into 2021. It's important to note, of course, that this is still early days for the category. It's very young. We fully expect that as we increase investments in production capacity, increase the amount of inputs in terms of plant proteins that we put into these products, as well as some more exotic or new forms of food tech, like recombinant proteins, fermentation, algae, fungi, et cetera, we're going to be able to make these products taste better, have better textures. We fully expect that the product labels will improve. The products will be a little bit better, have a lot more biodiversity of inputs. And of course, particularly as we can increase production volumes, the prices are going to start to slow down. This is positive because the industry that plant-based is competing against is just about as healthy and as tasty as they're ever going to get, but we're really just scratching the surface for the plant-based and alternative protein industry. And part of what's exciting about that, of course, is it creates positive momentum. As we see increased investment in this space, it enables plant-based and alternative protein companies to invest more in R&D and innovation and advancing the science, and also invest in more production infrastructure. Both of those things together allow us to make better products that have better taste and function, are much lower priced because we have economies of scale and efficiencies, much more variety of products, things that can be more widely available, and of course, products that are healthier and safer. We've already seen that demand is very positive for early days products that, while really good, are still definitely could use some improvement. And so we fully expect that as products continue to get better and better, more and more demand is going to be unlocked, particularly as products become much tastier and much cheaper. And that, of course, continues and completes what is hopefully a virtuous cycle or a positive feedback loop that leads to increased investments and allows us to continue to invest in the future of this industry. I'll just close this section by making an observation that this is continuing evolution that's already been started in many ways by the animal agriculture industry. We've abstracted meat away from the animal, and increasingly meat has come to mean protein. It's come to mean something functional, experiential. Something functional meaning it anchors the center of my plate. I build my meal around it. It's satisfying, it keeps me full. It gives me the nutrition and energy to live my day. And it's kind of an experience too. It's a specific grouping of flavors and textures. It's a lot of umami. It provides a certain experience that I've come to recognize. And increasingly, we've seen that plant-based and other types of alternative proteins are fitting in very well into the next step of this evolution, where it is about the protein. And it's less about these types of meat, egg, and dairy products being sourced from animal tissue or animal byproducts, and instead being sourced directly from plants or directly from other sources. One of the ways we can see this growth, and what I think is a very positive vision for this category, is that plant-based has increasingly become the 5th major center of plate protein that we expect on most menus, or that we expect when we're cooking for ourselves at home. Most American consumers consume a fairly good variety or mix of beef, pork, chicken, and seafood, and increasingly plant protein is joining that as the 5th category. If we zoom way out, looking over the past few decades in the US, there's obviously been some growth for both pork and for beef and for fish and seafood, but the real growth story over the past few decades has been the explosion of interest and consumption of chicken. And what we're excited about, I think, is that we're probably within a couple of years of seeing plant-based meat surpass seafood and fish to be the 4th most popular protein category in the US. So on average, if the typical American were to eat about 17 pounds of plant-based meat each year, which represents about 2-3 ounce servings per week, that would be enough to help it, to enable it to surpass meat, seafood and fish consumption. So we're talking about something that we've already seen major shifts in protein, and zooming at a high level, and it really feels like right now we're on the cusp of a similar revolution, but this time the protein is coming from plant sources. I'll close by just sharing a list of resources we have at the Good Food Institute that I encourage you to check out. Well, all the work that we do is open access. So we have a lot of business resources that'll help you with market and consumer research, such as what we've presented today. I encourage you to check those out on our website, gfi.org. We also have a wide variety of technical resources if you're interested in understanding the science and technologies that are underpinning this alternative protein revolution. We have a number of publications that'll be of interest to you. As I alluded to earlier, if you have any interest in diving deeper on specific numbers that we couldn't publicly share from today's presentation, please feel free to reach out to NPD directly or to myself. I've included my email there, and this will be included in the follow-up slides that are sent. And we also encourage you to check out additional plant-based resources from a variety of other organizations that we work with that have a lot of opportunities, whether those are events, educational resources, or tools and communities that allow you to connect to potential partners. And finally, I will close there to put in a final plug for our State of the Industry reports, which we recently released and capture some of this data along with a lot of other information about the investment landscape for this industry. And with that, I'll stop the presentation and turn things over to Kyle to see if we have any questions.
Great, thank you, Zach. Just to start, one person was wondering if you could go back to the contact slide for NPD so they could just quickly see who that person was.
I can.
All right. So our first question, just around the methodology. There's actually 2 questions. Just wanted to confirm if the 11,000 commercial operators were individual units, and then also do the estimates from the NPD data include chains with 250 plus locations, or is that revenue left out?
Most of the data that I shared today represents chains that have less than 250 units. The one exception is that one factoid that I shared that said that plant-based burgers have a 3.4% market share of total US QSR. That was based on a different study that NPD was doing that did look at the full US food service market. But everything else was looking, all the other NPD data was looking at chains less than 250 units. The other particular unit or question that came up in terms of 11,000 operators entering the category, that is individual operators, I believe. I don't think it represents unit count. So some of those operators could have 220 locations. Some of them could have one. And it also isn't really a measure of the total volume they represent. Some of them obviously could be massive, and some of them might be representing just a very tiny amount of volume. So it's just individual customers of plant proteins.
Great. Another clarifying question. What kind of products do you define as ground products?
Yes, the ground products generally just refer to restructured muscle tissue. So the contrast would be with whole muscle type products. Think of a fillet, think of a steak, think of something like a very complex structure like the flaky structure of a fish, for example. Ground products tend to be things that you would expect in like a nugget or a tender or a sausage. The structure and the texture isn't necessarily coming from the aligned bundles of animal muscle fibers. This texture and structure instead is coming from a lot of ingredients being ground together and then put in some sort of either a sausage casing or breading and then being cooked to just sort of form that way. So ground up and then formed into products. If you're interested in more about that distinction, we do have another resource in our technical resources section, our plant-based meat manufacturing guide, that talks a little bit about the difference in the manufacturing process between more whole muscle type products that are replicating that animal muscle fiber structure, and then more restructured or ground products that are a little bit structurally simpler and are replicating more of the like ground beef, burger, sausage type product.
All right, next question. Regarding the 2,500 operator churn / loss, do you have additional insight to what role that price played in those products being dropped? Was there also all protein switching, moving from beef analogs to chicken analogs?
The look at switching was just looking at the switching related to plant-based burgers. So I don't have a good sense of how much of that was coming from switching to like plant-based chicken analogs, for example. I suspect it'd be fairly small. It wasn't as significant a part of the market as burgers were. The other thing to note there is that a lot of that churn is coming from operators who are just throwing plant-based stuff on the menu and not doing it strategically. We didn't really have time to get into it today, but there's a lot of important marketing considerations, both in terms of how you message the product, how you show them on promotional materials. They're really important to keep in mind. You can't just toss plant-based on the menu and expect it to work. Some of the most notable failures, and I'm thinking in particular of the failure or the rollback that Tim Hortons in Canada experienced with its Beyond products. The product has to fit with your brand, it has to fit with your menu, and it has to fit with your back of the house operations. And in the case of Tim Hortons, my understanding is that it's mostly a breakfast cafe chain, so a burger was kind of an odd fit. Operationally speaking, it was challenging because Tim Hortons last year had over 60 limited time offers, so like over one per week, and that's a lot for your staff to handle and for your training to keep up with, and in particular your waiting times for like drive-throughs, for example. And finally, a lot of Tim Hortons, to my understanding, don't have a grill surface. They had to cook the burgers in microwaves, or ovens, which is a kind of a less enjoyable sensory experience, or it's harder to optimize the volume you're cooking as well as the quality of the end product. So it's really important when we think about putting plant-based on the menu that operators do so strategically, and that if you're selling to operators, you work with them very strategically on how they do it, figuring out the right cooking equipment. They don't have to buy new equipment oftentimes, they can just use existing equipment, but making sure that the preparation works, that it fits in their back of the house operations, that their staff know how to work with it. And of course, making sure it fits on their menu, making sure that you don't have a pizza chain just adding a burger without making sure that that's something their consumers are interested in. So plant-based is not a silver bullet, but what we've seen is when operators do add it strategically and put marketing muscle behind it, the results, as we've talked about, can be phenomenal.
Great, thank you. The next question. Were the check averages stats shared for Burger King and Dunkin' Donuts, were those looking at just the total check amount, or were those dividing the check amount by the estimated number of diners?
That's a good question, actually. I believe that it is actually adjusted so it's reflective of the number of diners. So it would be divided by the number of diners to arrive at the average per person. But I'll have to double check on that. In any rate, the comparisons that are made, so for example, Dunkin' I believe the check average for the plant-based product was with orders involving the plant-based breakfast sandwich, for example, were like $9 and their average is $7. So it was fairly significant growth. And that's a metric, of course, that restaurants track extraordinarily closely. So it is a positive signal, but as is the case with many of these things, the data that restaurants release publicly is often very paltry, so we just have to piece it together. But my expectation would be that most of the time those check averages are referring to a per diner average and not averaging out across the group. That said, if some of them are referring to still averaged across a group, that's still, again, a positive if it means bringing in additional groups or larger parties of people to a restaurant. But my guess is, my expectation is most of those are on a per diner basis.
And a slight clarification to that, if, for example, if the LTOs cause more people to come in and buy the offerings for their friends, would you say that info is reflected in the metric?
That is, yeah, that's a good question. I would imagine so, just because they're going to be buying, it'd be the same transaction, but it'd be buying a few additional items. So yes, I would expect that would be reflected in that metric. And included as an individual. So that could potentially, again, it's still a positive because it's resulting in growth, but yes, there might still be, if you buy 3 of those and then you share 2 of them with your friends, that's obviously, a check average isn't going to exactly capture how many different people are eating those products.
Great. So the next question is, have you seen a bigger response or reaction on clean label or nutritional information for food service compared to in retail?
There's definitely a lot of interest in this. A lot of operators definitely have concerns, or they express like surprise that consumers haven't embraced these products. But it really isn't all that surprising. A lot of the research we've seen, there was a recent study from the International Food Information Council that was phenomenal, that shows when you show consumers the nutrition facts panel, over 45% of them think that plant-based burgers are healthier compared to like a beef burger. And even when you show them the ingredient list, which obviously is much longer for a plant-based burger than for an animal-based burger, which just has 1 ingredient, beef, at least on US nutrition facts and ingredients labels, even then, still 40% of consumers think that the plant-based product is healthier, compared to about 29% think that the animal-based product is healthier. And there's a lot of other people who just don't know, or somewhere in the middle. So consumers really do view these products as healthy. There's a very strong association with plant proteins and positive health effects. And again, this underscores the importance of variety in the plant-based world. Just as animal products exist on a spectrum from highly processed to less highly processed, and there's all kinds of shades in between, plant-based products also come with a spectrum. And some products are, replicating that sensory experience of meat, and they don't, they have a longer ingredient list as a result. And some of them are really plant-forward, plant-centric. And our hope is that a lot of the more analog products can introduce consumers to the idea that plants have protein. Plants can be anchors at the center of the plate. They can be satiating. And a lot of them will, of course, increase their consumption of other types of plant-based foods. But ultimately, at the end of the day, most consumers are on different stages in their journey. And for most people, it's going to be very challenging to give up a steak and go directly to a kale salad. Although if consumers can do that, of course, that's wonderful and phenomenal. But a lot of consumers need sort of that gap product to help them make that transition and cross the chasm. And in a lot of ways, the plant-based products that are more analogous to the animal protein experience tend to be those products that help introduce people into the category and then allow them to, from there, explore other types of plant-based dishes and foods.
Great, thank you. Now the next question is, I can see that plant-based meat alternatives, or the analogous plant-based meat alternatives, are displacing a portion of sales traditionally focused on animal products. Is there any data to show what whole food plant-based entrees or burgers are doing to displace animal products?
That's an excellent question. And unfortunately, the data project that we partnered with NPD on for this did not include that as part of its scope. I believe that is a question potentially that NPD could answer. So I would encourage, if you're interested in that, reaching out to NPD to see if that's something they can track. We're not, unfortunately, we don't have any data on that. Our data today was just focused on meat analog burgers and the other proteins they're displacing. So yeah, the more veggie-centric thing is an open question for us at this point.
Got it. And there was a follow-up question asking if we have any data on meat analog burgers versus traditional veggie burgers, or if, on restaurants who sell both of those, but it sounds like that data is not available, unfortunately.
Yeah, I don't believe we had that granularity. If someone is really interested in that, please feel free to reach out to me directly, and I can go back through our reports and see if we have anything like that, but I can't recall anything off the top of my head. There was growth, as I recall, across the whole plant-based category, so multiple types of plant-based proteins were growing. It's not like plant-based veggie-centric burgers completely stagnated, but at the same time, a lot of that growth was taken by analog products and other types of plant-based meats that weren't burgers. Yeah, it's no way to put a number on it right now, but if anyone wants to follow up, I can see if I can try to dig something up.
All right, do you see plant-based meats coming to K through 12 cafeterias in the near future? How is the process of getting plant-based meats into school cafeterias different from other parts of food service? And what are the main challenges that have prevented this from happening? And what do you think still needs to be done?
K through 12 food service is very significant volume for sure. The biggest challenge we've seen for plant-based meats in K through 12 food service is the price point. Their margins in K through 12 food service are very, very small, and you mostly have to make up your money on volume. So it's very challenging to break in, particularly if you're a company that is, again, this is a very small industry. The plant-based industry going up against a much larger incumbent industry. And the reality is animal agriculture is extremely efficient at what it does and can produce things at very, very low costs. So competing with that is important. And in the long run, I definitely think K through 12 is a huge growth opportunity. But the industry, plant-based industry really needs to start hitting lower price points to be able to be really competitive in that space. And the other thing to consider there too is that a lot of, more so than in a lot of other areas, subsidies do play a very significant role in food purchasing for K through 12 schools. The USDA has a number of programs that subsidize the purchase of animal-based products and proteins, and not very few plant-based products qualify for those same subsidies and financial support. So that just adds, again, to the financial burden that's placed on school districts who want to integrate more plant-based. That said, this is an area where folks are extremely health conscious. We do want our kids to have the best foods and best proteins available. Increasingly, as millennials are parents and are starting to make their voices heard in school districts, we could start to see that change. So it's absolutely a massive opportunity for plant-based companies, but just be prepared for, it's primarily going to be government-led procurement. So be prepared for a lot of margin pressure, a lot of different kind of Byzantine bureaucracies to work with. And very specialized distributors and distribution chains that you'll need to work with in order to enter that segment. And I should add, we do have a guide to food service sales that outlines some of the major challenges. If you'd like, I didn't include a link to that in this presentation, but again, to GFI, and we can try to send that to you.
How would you define the omnivore segment as being different from our flexitarian definition? And for your reference, I defined flexitarian earlier as people who eat primarily vegetarian, but occasionally eat meat, or people who are actively trying to reduce meat consumption and add in more plant-based.
Yeah, generally the split seems to be between people who are actively thinking about integrating plant proteins more versus people who just aren't thinking about it at all. And a lot of people just aren't thinking about it at all. They're traditional omnivores and just sort of, will eat a variety of things. Flexitarians are people who consciously or subconsciously are trying to eat more plant-based foods. So it is by nature a very squishy definition. It's also not a label that a lot of consumers accept. But generally, the research we showed was from Mattson. We have a lot of other different organizations, different market research firms that we could cite. But generally, flexitarians seem to be somewhere around the 15 to 30%. It varies quite a bit of the U.S. population, and there's a lot of variance too globally. In general, flexitarians are distinct because we do see them significantly over-index for interest in plant-based foods and plant-based consumption. So that interest in, I want to eat less animal protein because I want to feel better about myself, or I want to feel better for the environment, or I'm trying to avoid red meat because I have concerns for my, like heart disease issues, whatever it is. A lot of people are avoiding animal products or trying to reduce them a little bit, and they see plant proteins as being healthier. So those consumers are distinct enough that we can see that dietary pattern does affect their purchasing behavior. And a lot of them will self-identify as surveys as being interested in that increase in plant proteins. So, but the numbers vary depending on who's doing the research, but it still represents a very significant portion of the population and is much, much larger than vegans and vegetarians.
Great, thank you, Zach. Just a quick note to folks who are using the chat box. Some of the messages are only going to the panelists rather than to panelists and all attendees. So if you're hoping to send a message that's seen by everyone, you just need to make sure that you select the correct sender. All right, and the next question. To what degree do you anticipate plant-based proteins will receive bad press or backlash similar to what GMOs have received?
Our anticipation, again, is that a lot of the products out there are going to appeal not to all consumers, but to a pretty large subset of them. So there are plant-based products that use genetic engineering components, and there are plant-based products that do not. And so that's part of what it means to build a really strong and resilient industry, is to build for diversity and variety. Consumers are not monolithic. Already, we have an industry, at least in the US, like even though it's very consolidated, consumers still have a variety of proteins, right? They're having beef, they're having chicken, they're having pork, they're having seafood, and increasingly they're having plant-based meats, of course. There's a wide variety in the types of meat that consumers have. Some of it is free-range organic. Generally, that type of like premium represents a very small slice of the market. A lot of consumers are just having animals that are produced in a very conventional, industrialized factory farming type way. And those animals have been fed antibiotics, they've been fed GMO feed. And a lot of consumers really don't seem to mind that. At the end of the day, consumers really seem to be motivated by the macronutrient profile of those foods. They seem to be motivated by an interest in something that's delicious and relatively affordable and cheap and widely available. So plant-based, certainly, it's great to see a lot of companies who are embracing GMO ingredients, and it's great to see a lot of companies embracing non-GMO ingredients and inputs, because if we're going to reach 100% of consumers, there needs to be a massive amount of variety and diversity in the industry. So I do expect that there's going to be some pushback against particular types of products. We've already seen that, but at the end of the day, it's pretty rare for one product to appeal to everyone. It's very difficult to do.
All right, earlier you mentioned digital channels. And one of the attendees would just like some clarification on what you mean by that.
Yes, so for digital channels, I'm referring to online ordering, either through a restaurant's website or maybe a third-party app such as Seamless, Grubhub, et cetera, Just Eat, Takeaway. So anything where a consumer is using some form of online channel to place the order, whether that order is for pickup or for delivery by somebody. Those channels were already growing fairly well before the COVID-19 associated lockdowns, but since we've seen all of the restaurant closures and a lot of the shift from food service volume to retail volume, a lot more people have been trying those apps and trying to order food through digital channels. So some of that will probably go away as the lockdowns lift, but at the same time, for some consumers, they've tried it, they like the convenience that an app offers or that a restaurant's website offers, and they might stick with it. So we kind of expect that this situation, the pandemic, has created an accelerating effect on digital channels, and that since they are going to play an increasingly large part and a larger role for restaurants as revenue sources, the fact that plant-based can do really well on those channels is very positive. This is more of an abstract benefit, but one of the things that it represents in a digital channel is sort of the erosion of the physical shelf or the physical menu space and the amount of things you can cook. Very limited in traditional bricks and mortar type establishments, of course, because you don't want to have too many foods. That just creates a lot of cost and complexity. But in a digital first world, the shelf is essentially infinite. It's the difference between shopping at a local bookstore and shopping at Amazon, where the selection is almost endless. And so in a digital world, plant-based stands to do very well because there aren't the same restrictions on different categories and number of products. And it's a lot easier for a loyal fan base to build a niche, to have a niche following, really power a brand to sustain success. So we've already seen plant-based succeed on a lot of digital channels. Grubhub has indicated that a ton of its top most ordered dishes were plant-based over the course of 2019. And we fully expect that to continue. And that's exciting, of course, because it's taking a bigger and bigger share of food service sales.
All right, the next question is, an important driver for adopting a plant-based diet is to do our part for the environment. However, soy is a big driver of deforestation. What are your thoughts on this?
Yeah, very important question. So in general, what we talked about at the very beginning and didn't spend much time on, but plant-based foods just generally are going to be thermodynamically much more efficient than animal products. So it takes 9 calories into a chicken in the form of a feed crop like soy or corn to get 1 calorie out in the form of meat. And chicken is a fairly efficient product by comparison to, say, pork or beef, which takes something closer to like 25 to 1, for example, in the case of beef. So it's incredibly inefficient to use animals as biofactories to convert plant matter into animal protein products. And so the vast majority of the soy that we are growing in the world is going to feed animals. Almost all soy we grow is crushed and pressed for oil. A lot of that oil does end up in the human food system, but the vast majority of that result is then going to be fed into the animal feed business. Over 95% of soy in the United States, for example, ends up in soy grown in the United States is ending up in the animal feed system. So most of what's driving the massive increase in planted soy acres and causing that deforestation is demand from the animal feed business to feed their animals because it's extraordinarily inefficient. By contrast, plant-based production, you're able to extract the protein directly from the plants and mix it with other ingredients to create your products. It's a far more efficient process. And if you're interested in seeing the actual details, again, I didn't put this in the presentation, but GFI has a sustainability and life cycle assessment fact sheet that compares plant-based burgers with beef burgers and just shows the orders of magnitude improvements in greenhouse gas emissions, land usage, which is the driver of deforestation, water usage, and then that, of course, trickles down through all parts of the agricultural input system, herbicides, pesticides, fertilizer, et cetera. So absolutely massive advantages from a sustainability standpoint, even if plant-based products are using soy, just because you're bypassing the animal, which is the weakest link in the protein supply chain.
All right, thank you, Zach. We are coming up on time now. We're about 13 minutes past the hour. We still have questions inside the Q&A, but we ask that you just, if you do have those follow-up questions that we weren't able to get to, just please contact us and we can try and answer for those of you after the fact. And I'll hand this back to Zach now just to say some final words.
Great. Thank you so much, Kyle. And thank you all for attending. As we said at the outset, we'll be sending the slides and we'll make a recording available after this is concluded in a follow-up email. So thank you so much for your engagement and your questions. And please feel free to reach out to the Good Food Institute if we can help you in your work to improve our global food system. Thanks.